All right, former Fed advisor, the president of Money Strong, Danielle DiMartino Booth, welcome back.
Thank you for having me back again.
It's always nice to see you. You and
Pleasure's
I
mine.
always seem to meet at times when there's so much going on and so much to discuss. And as always, I'm going to start with the Fed because having you here is a real advantage for us in trying to get a handle on what's going on. We're possibly weeks away from another 25 basis point hike that could be the first of several if people get their way. And we're also 2 days after the election. So let's just get a broad outline of you. Where do you think the Fed is right now?
Well, I think the Fed right now is probably shaking in their shoes because they've already gotten that one Fed hike right out of the gate with the election. So we've had quite a bit of tightening in a 48, 72-hour window, which I think has probably taken them by surprise. So the question is, what's next? Last December, they hiked. They were concerned about credibility. They're probably more concerned about credibility this year than they were last year at this time. However, there are so many different moving pieces with this unexpected Trump victory that I'm not sure what they do next. And when you factor in what's going on in China and their currency and the movement in their reserves, and the fact that the Chinese were able to put the Fed on hold once before, successfully, you have to ask yourself if they're going to be able to thread the world's narrowest needle and push that rate hike through on December the 14th and not make a big boo-boo.
Well, it seems to me they've been trying to thread that needle and it's been getting narrower and narrower for the past year. You know, they kind of got that 25 basis points away and it kind of passed quietly and everyone thought, okay, but then we had January and February and nobody traced that back to the hike in December, which I found interesting.
Well, I did.
But now it seems to me, what do you think is their biggest problem? What's the one thing they really is it Trump and the possible dislocations to the constitution of the board? Is it China? What's the thing that they should really be most focused on, do you think?
Well, they weren't focused on Trump at all.
For sure.
I don't think that they thought that that was even in the realm of possibilities. And I think that there was something interesting that happened in the September meeting when Yellen withstood a triple dissent from the regional bank presidents, who the powers that be at the Federal Reserve Board in Washington, D.C., and at the New York Fed, they largely, even publicly, disregard the district presidents. So I think that Yellen was very calculating in withstanding that triple dissent, because I think she was staring down the barrel of something much graver, and that would have been a double dissent on the part of Fed governors. Now, we haven't had a Fed governor dissent since 2005. Enter Trump. Enter Trump. So Obama has not been able to push through any of his Fed nominees. So the Federal Reserve Board's been running skinny with two vacancies for quite some time now. And it's not just Trump, but he's got the Senate.
Yep.
So those two vacancies can theoretically be filled very quickly and make Janet Yellen very uncomfortable because she would be without a doubt, dealing with dissent among the governors, which again isn't something that this market's used to seeing.
No, and look, we've seen in the past, whenever we've seen that, it's been very damaging to markets. I mean, uncertainty right now is perhaps the biggest enemy. So, but if we see that and...
What we're showing you here on our YouTube channel is just the tip of the iceberg. No matter where you are in your financial journey, whether you're a beginner just looking to break into the market or a financial professional looking to up your game, Real Vision has something for everyone. Every day, our team of expert journalists provides in-depth analysis, written reports, access to live streams, and access to our community, The Exchange, where you can interact with people just like you from all over the world. For just $1, you can unlock all of this and more at realvision.com. Try our Essential tier. If you like what you see, it's only $20 a month thereafter. So click on the link in the description, go to realvision.com, and see what you think. We look forward to seeing you there.
In the past, whenever we've seen that, it's been very damaging to markets. I mean, uncertainty right now is perhaps the biggest enemy. So, but if we see that and Trump goes for a hawkish board, is he really about to do that, given what he wants to do?
I like to think that Trump has been reading me because he did kind of a flip and began to recognize the damage that low interest rates are doing above and beyond every president's dream of sailing through their term with borrowing costs at 1.8% for Uncle Sam. It's an open checkbook. It's an open checkbook that's led to a lot of congressional misbehavior, but it's an open checkbook just the same. And you would think that Trump would want that, given some of the things he wants to do with infrastructure. Even if he goes public-private, nothing's going to be free. The deficit's going to grow. So you would think that he would want those low interest rates. My hope would be that he would stick with this newfound knowledge of his that you're going to have bigger problems on your hand if you don't give the savers and the pensioners and the life insurance companies some semblance of relief. He's kind of echoing his peers in the United Kingdom, as well as those who are in Germany who have informed Merkel that she will be looking at life insurance companies beginning to go out of business in 2018 if something doesn't give. Yeah,
I mean, I totally get both sides of this, but the problem is, first of all, Trump is going to inherit. I mean, he's going to reap the whirlwind, right? Whatever's coming is coming on his watch. I don't think we get through 4 years without something dislocating somewhere.
Unless we're going to rewrite history, he's going to have to deal with the recession.
Exactly right.
If I'm Janet Yellen at the Fed, I try and hold on until 18 and just look, if she wants to be truly apolitical, she holds off in December because we've already seen tightening. And I wait and see what happens to housing. I wait and see what happens to commercial real estate, which is so overextended. I wait and see what happens to a lot of these companies that have had access to the capital markets. But we've got defaults right now in the corporate bond market at the highest level since 2009, and there's a lot of whistling past the graveyard, very little recognition, a very large amount of refinancing that has to occur in the near term that's never been a problem because the Fed's always been at the zero bound. So the question is, what happens if she insists on this rate hike in December? Does it make it appear that she's politically trying to hamstring Trump and put the economy into recession so that the midterm elections in 2018 end up giving the Doves the power seat back? I mean, that's the question. These are huge questions that I didn't contemplate before this happened. And yet, now we are at the precipice. We have the opportunity upon us. I mean, I've been a vocal critic of the Fed and the way policy has been made. Alan Blinder came out a few years ago and said, when I was on the board, I was the PhD, I was in the minority.
Yeah.
That's not the world we live in anymore. But it's how policy is made, and whether you agree with what comes out of his mouth, with what has come out of his mouth or not, what you do know is that the orthodoxy of monetary policy making is about to be questioned, and this could send ripples through the world.
Well, it's hard to see how it doesn't. I mean, to me, it's not a case of
it wouldn't have been under Clinton, period.
You think?
I think that Clinton would have made sure to solidify the Doves' sway. She would have made sure that the Board of Governors stayed all powerful.
But I think if Clinton had won, the one excuse that the Fed currently has to not raise in December would have gone. So I think if Clinton had won, they would really have had to go in December.
Oh, yes.
I don't see any reason they couldn't have done that.
Oh, yes.
And now we get back to this situation where if they don't go, if they do go, whichever they decide to do, they either lose their credibility or they lose the market. And one follows the other anyway. So
there are people who were kind of actively campaigning to fill those vacant seats who've been great advocates of getting rid of the $100 bill.
Yeah.
Who have been advocates of, what we can do negative interest rates better than Japan. They didn't do it right. But we know how to do the launch sequence. We're better. And by the way, buying corporate bonds and stocks, both of which Yellen brought up at Jackson Hole. So these are not figments of anybody's collective imagination. These are things that have been said that would have been feasibly implemented under a Clinton administration that if you've got hawks among the district bank presidents and 2 hawks on the board of governors, would you theoretically be able to withstand that much dissent and push through some of these more unconventional policies that I think would have been deployed to fight a recession under Clinton that won't necessarily be available under Trump?
It's an interesting question. I mean, there's a lot of people thinking, what if right now, particularly so close to the election. But
right.
Let's play devil's advocate and go through this, because I think it's really important, as you said. For Trump, who I suspect is going to be very, very focused on how he's perceived in the world. Ordinarily, he would have been anyway, but I think given all the negative impressions of him that have been circulated, he's going to be even more keen to make sure that he doesn't look bad.
Right.
So, he's going to get advice. There's talk of Jamie Dimon being the Treasury Secretary. He's going to get plenty of advice from people. I just don't see that raising interest rates and helping the savers out, helping the middle class, which I agree is completely what's required here, it's going to make him look really bad, because he's going to walk straight into the teeth of something that people are going to be able to blame squarely on him.
Right.
And I think that's going to matter to him a lot.
But this December meeting will occur during the lame duck session. He has no control over what this is. This is the Fed's last stand. This is their last moment to try and make a statement. And there's no denying that we've seen the peak in the labor market. A lot of people want to think otherwise. Implementing minimum wages isn't going to help profit margins, quite the opposite. And we've seen a notable uptick in inflation, and you're talking about margin compression here for companies while payroll growth is slowing. At some point they might have to make a difficult decision. You might get a non-farm payroll hiccup.
Well, which we saw this year. We saw what happened when we got that 15,000 number come through. I mean, that really did put the cat amongst the pigeons.
Right.
But for Trump, if they do go in December, at least he's got the perfect blame all. It's, they screwed me. They raised rates. They haven't raised the rates all the way through this time, and now right before I come into office, the Fed goes.
And to his credit, he's been saying that the Fed is a political institution, so he would certainly have a leg to stand on if he was to say that. If he was to say, this is the punctuation mark that they put on 8 years of really bad monetary policy making. Look at where it landed us. I'm the new sheriff in town. I'm going to change how things are done, including and starting with the Federal Reserve. But try me.
Yeah, but he's going to have to talk rates down, though, to do that. If he's going to say this is what they've done, they've screwed me,
right,
he kind of then has to say this rate rise is the problem.
It's as delicate as the situation is for Janet Yellen and all of her peers, worldwide, by the way, combating this metals revolution. It's going to be difficult for Trump also, because at the same time, he wants to get infrastructure spending going.
Yeah.
Which means it's not just speculative flows in and out of China, because China's not going to rip itself down to the studs and rebuild. So prior to the Trump victory, there wasn't as much justification for the pricing we've seen in rebar, in iron ore, in copper. After a Trump victory, you're talking about fundamental drawdowns of some of these supplies, and then inflation, comes back into the mix. It's, again, the Fed's not going to have an easy time of it, nor is he.
Well, you and I could sit here and talk the Fed all day long, which I know would be fun for the two of us.
Right, but there's something occurring before December the 14th.
Exactly right, and that's December the 4th, which is what I want to come on to, and that's the referendum in Italy. Now, it's something that people are kind of vaguely aware that there's something happening in Italy, and it's realistically, it's not anybody's business outside Italy, but it has enormous implications. I mean, the nuts and bolts of it, it doesn't really affect anybody, but because of the way it's come up, because of the way Renzi's framed it, it has tremendous implications to the world. And I know you've just been to Italy. Yeah. So let's talk about what you found and your take on this referendum.
So one of the things that surprised me in Italy was there wasn't hatred for Trump, because there was widespread disdain for Renzi. I had a PhD-educated tour guide in Florence, spent 4 hours with him one afternoon. Brilliant, educated, came from a well-established, long-standing family, and he used the word coup. He basically said Renzi took his office.
Yeah.
So my conversation with him spurred me to talk to every man on the street and woman I could. And there's a very widespread perception that Renzi doesn't belong where he is. I kind of started drawing a lot of parallels between Mexico's president and Renzi and how he is perceived. But I digress. I don't think the referendum is going to pass. And Renzi's approached this in a very black or white ultimatum fashion. So I think he'll be forced out of office. And then you start to get people's attention. Because when you consider the difference between Brexit and the Italian referendum, and the people who are behind the five-star movement and what the five-star movement has called for, it doesn't have to do with leaving the European Union. That's not the point. It has to do with globalization and joining the euro occurring at the same time and gutting the manufacturing sector of a country to a greater extent than that of the United States. And the fact that this five-star movement has its target on leaving the euro and going back onto the lira, and they're completely rational in their perception of what that would accomplish.
Well, if you go back and you look at GDP in Europe, you can see Italy has basically gone sideways for the entire time it's been here. It clearly went in at the wrong level. That's the problem here.
But the Italians see it as being, since we've joined the euro, we've given up 20% on the GDP side. Germany's gotten 20% on the upside on the GDP side, and they get to go sell their BMWs and Mercedes for less than they would otherwise. And we're not going to take it anymore. And I think that the backfire for Renzi is that people are going to be voting on a lot more than the specifics of the referendum. They're going to be taking the opportunity on December the 4th to make a statement about life since 1999.
Yeah.
And I don't think he's prepared for that.
But he's not a politician, right? He's basically a technocrat put in there, and some would say he's done a good job in helping keep everything together when he was put in, because it was people forget, but things are really falling apart.
And he's been playing some hardball for the banks.
He has,
and winning.
I think that, but that's the issue here. He's trying to put Germany over a barrel, because I thought it was very naive of him to say, if I lose this, I'm going to quit. No politician does that. David Cameron made the same mistake in the UK, and we saw what happened there.
Right. I mean, you can only imagine Mrs. Draghi in Frankfurt's about as happy as can be that she might not have to go through another winter in Frankfurt. Who are they going to call to come rescue the country? I mean, it's kind of intuitive that they would pick up the bat phone and call Draghi and say, "Come save your country."
Yeah.
And I mean, it could come down to that, because you need somebody masterful to handle what could possibly happen, because Italy could set off the mother of all daisy chains. It's not as strong as Great Britain was going into the vote, but it is very connected.
Well, let's talk about that, because I think this idea of the daisy chain and the ripples that this will cause, people talk about it's a constitutional Italian referendum. So what? But it's not that. It's Brexit. Trump is an escalation of Brexit, but Italy potentially, in terms of the damage that could do, is bigger than both.
Oh, it is. When you consider the bank's exposure to the country, when you think about the fact that Italy's got the third largest sovereign bond market in the world after the United States and Japan, there are a lot of things that could go wrong. And the only thing they've managed to do for their banks is put Band-Aids on the situation. They've still got a real capital issue, to say nothing of the fact that French banks, German banks, they're exposed. So the wherewithal to do something about this, it could get ugly really, really fast. But again, I go back to the conversations I had with Italians when I was there. They get it. They understand that they're the laughing stock, that their government falls every 5 minutes. They make jokes about it, about how many different people have the revolving door into their government. But this isn't about displacing one person and putting another into power. This isn't what this is about. This is about a country that makes the fact that we've got record levels of people living with their parents in the United States look like a walk in the park, because they've got more multi-generational families than any other country you can name, and it's not by choice, I assure you.
Sure.
And you tack onto that the fact that the situation in the Middle East is not improving at all, and that they're the economic first stop. You know, there's something novel about the Syrian refugee crisis for a lot of Europe. There's something novel about it for the Italians. Mm-hmm. They've been dealing with it. They've been dealing with the economic ramifications of it for years. And when you consider the preponderance of globalization, never recovering from the financial crisis, not feeling like they have the respect of Germany, there's so much more at stake than just one young Matteo Renzi. So much more, and I think they're going to make a statement on December the 4th.
But does Draghi present a solution in that? Because it seems to me that he will be seen as the ultimate EU insider. I mean, he's been front and center of everything they've done to try and keep this project together. Right. So, it seems to me that Grillo is Trump to the max. I mean, he's an outsider, he's outspoken, he's got character and personality.
He does.
And like we saw in
And by
the
the way, he wasn't always a comedian either.
Right.
I mean, Americans perceive him as being, what on earth are you do? You putting Chris Rock in charge of a country?
Right.
That's not what we're talking about here. I mean, he's got a career, and he's well spoken. He's articulate. He understands politics. He understands policy, banking, finance, all of these things.
But isn't that interesting that he's always described as a comedian? And we've seen coming back to the election here. Yeah. But this whole idea, because to me the big loser of the US election just gone has been the media. It's something that has kind of been exposed as not really the arbiter of truth. It's not really the fourth estate anymore.
Right. No.
And yet Renzi is, to your point, is all anyone knows about him is that he's a comedian.
Look, I was born and raised. I mean, I'm not trying to say anything bad about the people running The Economist, but just my Twitter feed of late, there's so much resentment towards The Economist, which obviously they're all anonymous. You don't know who's writing what. But the condescension when it came to, those poor people in America who were deluded into thinking that Trump could.
Yeah.
It's the same exact tone when they're writing about the Italian referendum, that the Italians just don't get it. They don't quite understand the ramifications. Poor them. The referendum will prevail. That line, and it wasn't until I was listening to the exit polls in Ohio a few days ago, and they're interviewing small business people coming out of their polling stations. And these are people who want to create jobs.
Yeah.
They want to conduct business. They have an entrepreneurial spirit, and they've been disallowed. Talking down to them was probably not a good idea.
Yeah.
It really wasn't.
That's been proven. You look at, there's so many articles now talking about the reason Hillary lost was Samantha Bee and John Oliver and Trevor Noah and these guys that made fun of the disenfranchised middle class, which...
Well, every think tank from here to across the pond and back in front of the Brexit, it was the same exact situation.
Same thing. So let's go through this Italian referendum and try and figure out the dominoes, because it's not the end of anything if that referendum doesn't pass. To me, the issue is
Merkel's got a checkbook still. It's not like it's...
Well, she does, but she also has an election coming up.
Yes, she
herself.
does.
So it's really interesting how the kind of, I keep talking about these guys being in a prison of their own construction, and they're putting a new layer of brickwork inside the wall every week, and it's getting tighter and tighter. But the issue seems to be this Italian banking system to me. Renzi's move was to put pressure on Germany because they need a bail-in. Mm-hmm. A bail-out, sorry.
Yeah.
A bail-in is no good to them. But once again, these guys have put the bail-in rules in place. Cyprus got it stuck to them when it was their turn. Yeah. The Italian banking system is a disaster waiting to happen. It's just a question of who picks the tab up. The Italians want it to be Germany.
Right.
Germany wants it to be the bondholders. How do you see that playing out?
Every time they've tried to find some semblance of a private market solution, it has quietly gone into the night, an abject failure.
But would you invest as a private investor in
Italian?
Of course not. No, of course you wouldn't.
So that situation's never going to, it will never be resolved in the hands of private people who can do rudimentary math.
Right.
So it will come down to Merkel. It will come down to the Germans, and the question is, will the political wherewithal be there? And if that's not the case, and the market starts to smell weakness, and Merkel trying to retain her legacy, it gets really tricky really fast. And you're talking about, within a matter of hours, you start talking about French banks.
Yeah.
I mean, for me, the most brilliant, inconceivable, I mean, Renzi's legacy is going to be that 50-year bond, which was followed by his own sovereign yield spiking. I mean, his timing was brilliant. Could they go back into the market today?
No.
And issue another 50-year bond? I'm thinking no.
So Italy, let's say they vote no. I mean, the cat is squarely amongst the pigeons there. We've got a French election in May, which is close enough.
Oh, yeah.
The populist movement is rising. Italy is now hamstrung because it's going to give Grillo a lot more chance of getting some serious power in Italy.
Yeah.
Is there a way back from that for Europe, do you think?
Not if we go into recession.
Right.
Plus, I'd like to think that Trump was going to put the smartest people in the room around him. But the idea that the United States is going to have the ability to come riding to the rescue, I don't know.
Well, I've got to think, I still think that the greatest job offer on the table for anybody right now is Jamie Dimon for Treasury Secretary. If he can sell his JP Morgan shares for no tax right now, the Hank Paulson, right? It's exactly what happened.
That's the Hank Paulson way of doing things. I mean, he was able to do that.
Exactly right. I mean, that's got to be,
the idea that he kept the lines of communication between himself and Goldman Sachs closed is now a matter of record that he patently didn't.
Sure. Look, the job's going to suck, but hey, you could do it for a couple of years.
Right.
And,
but that's a frontline job.
It is a frontline job.
And it will be more of a frontline job when you consider that you're seeing weakness in the supply chain around China. It's undeniable. It's quiet. You watch some of these PMIs come out and you go,
yeah,
oh, what's happening to South Korea?
Yeah.
Ooh.
Well, let's talk about that, because one of the things you brought up right at the beginning of this was China and your concerns about that, and it centers to me around the capital flight, around the yuan, around the dollar, and China's really, it's lost the ability to kind of choose what it wants to do. It feels to me like everybody else, they're being pushed somewhere they don't really want to go, but they're kind of going to have to face it. They're probably going to have to.
Well, I look at this $3 trillion in three different ways. They're all about long-term commitment. These are not commitment phobes. This is like the opposite of the way Americans think. 1 quarter at a time, let's dress the windows. They want that road really badly. They want to be economically dominant once their insolvent banking crisis, blah, blah, blah. Who knows how that's going to play out? They know it's going to play out. But they're looking over the horizon and they want that road. Well, if they want that road, then they have to earmark $1 trillion, period, end. $1 trillion of the reserves are pretty illiquid. And illiquid bonds in this world are really illiquid, which leaves them with $1 trillion of reserves. You can't have the level of bleed that they've had for long.
No, you're absolutely right.
And that is when, I mean, we know, we've heard, I'm good friends with a guy by the name of Leland Miller. He runs the China Beige book. The demand for credit is not there. The ability of the middle class to rise overnight is faltering, and it should have. You're talking about moving a massive tanker inside of a stream. It takes a lot to turn it around. It's going to come down to the hot money that flowed in during our era of QE, during the Fed's QE era, and what happens in the metals complex going forward that could potentially ignite enough inflation that they start to run through their reserves much more quickly than they want, against a backdrop of an industrial sector that has a default rate of who knows what, because the government right now is allowing companies to exist and continue operating in default months and months and months. into default, things that we cannot wrap our heads around. You miss an interest payment, you go from triple C to D, and you consider restructuring. That's not happening. So there's a lot of falseness right now from the outside looking in to China with $1 trillion to figure it out.
Well, we look at that through the Western lens, and I agree with everything you said. But I've often wondered with China, because there is that, who knows what, there's that layer of opacity that sits across everything. Mm-hmm. And it seemed to me for the longest time now that markets are essentially, the deal with China is this. You're saying you're growing at 7%, 6.7%, whatever it is. We know you're not.
Right.
And we know you're not. But as long as you don't tell us you're not, we don't have to invest accordingly. And so there's this game going on, and whether it's the amount of credit in the system, whether it's the insolvent banks, the SOEs, whatever it may be, there's just enough deniability that people can play the don't ask, don't tell game.
But Grant, think of the stakes.
Yeah, no, they're enormous.
I mean, if they need to go into liquidation mode, for example, if they start selling, God forbid, treasuries.
Well, which they have been doing. If you look at the tick flows, they are.
They have. But it's not been aggressive.
No, but it's been steady.
But think about the backdrop. Think about the fungibility of quantitative easing in investors' minds. Think about why bond yields are where they are, and the vigilantes are still being held at bay. There is a gentleman's agreement in the bond market right now that as long as you've got $200 billion per month of QE emanating from somewhere,
wherever, yeah,
we're good. And as long as we assume that you, Bank of Japan, ECB, Fed, as long as you assure us, Bill Dudley, when he changed the name of the game and said, no, reinvestment, no, we've changed our mind, we can hike interest rates, we can keep the balance sheet. The minute that happened, the working assumption became, we'll keep your bond yields low, world, because we are going to assume that every single bond that a central bank buys is permanent supply disappearing. Never again to hit the market. No central banker is ever allowed to sell a single bond off their balance sheet, because if they do, then that supply that was extinguished permanently, dodo bird, adios amigo, the minute one central banker blinks, because they have to go back to their mandate of inflation. And by the way, food inflation's coming to the United States soon. So they won't be able to play this hopscotch between the core PCE and the PCE. They're both going to be ugly. But the minute a central banker sells a bond, I predict that the opacity you're talking about in China becomes clear, but that we'd rather find some really dark glasses to put on instead. Because then you have out of control interest rates and a dynamic that has been in a state of deep hibernation for over 30 years. So to say that Yellen and Draghi should be sleeping at night is naive.
Yeah, I completely agree. And to me, it's the Japanese that I worry about. This move of pegging the yield curve at the 10-year at zero, I'm staggered at how little has actually been written and commented about that. Because if you're looking for a signpost, something in the road, a peg that says, okay, if you want to know the route to central banks losing their credibility and being tested by those bond vigilantes, and by the way, making a gentleman's agreement with the bond vigilantes is such a dumb thing to do. I mean, it's fine when you're all in cahoots, but they are not gentlemen. When this thing turns and they see a chance, hey, here's how we make some real money by taking it to the central banks. As soon as the Japanese put that peg in the road, there is something you can measure. If we get stress, the market's going to say, okay, Kuroda-san, let's see how many you're going to buy. Let's see how many you're going to buy.
But to the negative interest rate crowd out there that thinks that it can be done better if we do it here, we're smarter.
Yeah, that's exactly right. It doesn't, negative interest don't work for your country, right? The same way they don't work for their country and their country, but that's not going to stop them trying.
And by the way, they're flying blind given the explosion in emerging market dollar-denominated debt.
Sure.
And that's why I'm saying you cannot describe to me what the daisy chain would look like, because we've never had a $200 trillion plus debt market to deal with. It's $60 trillion bigger than it was when the world blew up in 2007. So there's just no telling what happens if central bankers lose credibility. The gentleman who was the star of the movie The Big Short, when pressed during an interview recently.
Yeah, Michael Osman, yeah.
He said, it's credibility. That's the bubble.
Yeah, I think he's absolutely right. When the
first person loses confidence in a central banker, it's game over, because we don't know what the outcome will be. We don't know. And could it be something as quickly as December the 4th followed by December the 14th? When you've only got 100 basis points of yield to play with? In terms of everybody's excited that we went from 75 to 100 basis points. Ooh, the yield curve's steep again, woohoo! Close your eyes, blink, it could change in a heartbeat. And then what?
Well, I think this is such a great point. Our mutual friend John Malden asked me this at his conference 2 years ago. He said, is there a bubble anywhere? And I said, the bubble's in confidence. And I thought then it was in danger of bursting. We're 2 years on, 18 months on. And not only is it bigger, but it's so much more fragile now because of exactly what you just said there.
When you consider the punditry that is hell-bent on keeping this rally going, in bonds and stocks, by the way, because there's no one or the other. There's no going back to the world where safe haven and that's a bunch of hooey. We're never going back there. We had a weird world where stocks and bonds rose in value for 8 years, which means the unwind's going to look like the mirror image of that.
Yep. And the overshoot, don't forget.
Right. When you consider what they have at stake to try and keep this thing going, it helps explain why, to your point, Japan has been so ignored. Because the message from Japan is, and the message from Draghi, by the way, go back to Yellen at Jackson Hole. Draghi's telling you corporate bonds are not the end-all be-all. Japan's telling you you're in a world of pain if you start owning the entire stock market. The bigger point is QE finite by definition?
Well, look, it depends, because let's face it, the definition going in and the definition now, whether it's explicit or implicit, is different.
Right.
Because it has to be. And this desperation and this need on the part of the guys who you quite rightly say are trying to hold this whole thing together. Yeah. The worrying thing for me is the lengths they will be forced to go to try and do that, whether it is overt financial repression, whether it is capital controls, whether it is forcing pension funds to own a certain amount of treasury bonds. I don't know, but they are going to have to do some really desperate things to stop this thing, because absent genuine growth, and people can talk about why equities are up because with Trump comes growth, they can talk about that all they want, but it's deficit financed, short-term infrastructure blast growth.
Right. You're not going to reignite entrepreneurism in America overnight.
Or, God forbid, the consumer. It's just not going to happen. 70% of your economy right there is gone. You can build all the bridges you want.
And we're already seeing exhaustion.
Yeah.
People can talk all about the fact that the subprime automobile market is a tenth of the size of the mortgage market. You can talk about that all you want, and it's true. It is not a source of systemic risk. That does not mean that it's not a source of real anger when you pick up the Financial Times and read about the repo man having a good day.
Yeah, right.
Because the defaults and the bad loans and the write-offs and the losses are actually starting to happen. These are who voted Trump into power, but you can't give them financial wherewithal overnight. You just can't do it.
So what do investors do? Because at this point, you've had this great ride following the central banks. You buy what they're going to buy. When I look at the bond markets and we talk about, okay, there's a change coming here, and I see the US going into recession. If we don't look back on this, and it was in recession right now today, I think Q1 2017, it's going to be undeniable that we're in recession.
Unless we have another soybean explosion export.
It's
that
possible.
is worth 0.9% of a third of GDP growth.
Yeah, maybe, but let's not peg our hopes on that. But you get to this point, and suddenly you look at the world and you say, okay, look, we've got bond markets where they are, and somehow treasuries are yielding, 10-year treasuries are yielding 2% now, versus Italy and France and Spain. I still see one big rotation now. It's not going to be buy all the bonds that the central banks are buying. It's going to be, buy the bonds that look relatively decent value. To me, that's treasuries. Right now, I would sell all the Spain, France, and Italy you want to buy from me, and I'd put it all in 10 years at 2%. I think that's a great short-term trade. Long-term, I think, as you said, they're all doomed.
Right.
But there's still going to be this one more rotation. The US goes into recession. The ripples go everywhere. There is no escaping that now, wherever you look. What does that look like here in the US from an on-the-ground perspective when that recession gets confirmed?
Well, given that so many people don't feel that they've ever been privy to what little recovery we've had, and given how stretched pensions are, you're going to end up having checks having to be written out of Washington quicker than you would think otherwise. You really are. I wrote a few weeks ago that the baby boomers are no longer an actuarial theory. They're a reality. The checks are being written. The last time markets threw up, they said, you know what? I'm not retiring when I'm 65. I'm retiring when I'm 70. Well, guess what? They're turning 71. And the physiological decision to stay in the workforce won't work for much longer. And that means that these pensions are going to come under tremendous amounts of pressure. People ask me all the time, like, God, how do you sleep and wake up in the morning? Do you keep all sharp objects? And there are a lot of danger points with the pension system that will test our leadership. Meredith was right, but early.
Yeah.
And the idea that we can escape what's to come, given demographically what we're staring at, is naive at best, and it's reckless at worst. And when you throw private equity and all of the dry powder that they have, that they're sitting on, still waiting to deploy on pensions' behalf at really egregious valuations, yeah, it's hard to sleep at night.
Well, you and I have both written about this recently, and I'll plug this now. Anyone that isn't on your mailing list should absolutely go on that, and there'll be a way for them to find that.
But with no sharp objects.
With no sharp objects. But the pension thing is a huge problem. And here in Dallas, is at the moment is ground zero, because there's a story here with the police and fire pensions, which I don't think many people are paying attention to.
Investing directly in real estate, what a good idea.
Right, but not so much from the investment side. But now it's amazing. People assume that people don't get it. But we're seeing this surge of people trying to retire early and take the money because they see it's not going to be there. And if that dynamic and that belief spreads, forget all the other problems. The pension fund underfunding is ground zero.
I mean, look at what happened in California recently. This was a story that was not covered. There was a small little sliver of CalPERS. They decided they wanted out. Fine. There was no money.
Yeah.
They're like, oh, no, we keep a separate set of books for actual cash outs that has nothing to do with the broken books that we already say that we're X underfunded.
Yeah.
And yet their advisors are saying, forget hedge funds, they're too expensive. Buy private equity instead. So not only have they increasingly, as a factor of time, gone out on the risk spectrum with grandma's money. I mean, what's racier than Vegas? That's pensions. That's seriously. But they've not only gone out on the risk spectrum, they're way out there on the liquidity spectrum.
Yeah.
So if the need is there to get the cash, the bylaws in their investments won't allow them to get to it. So it's going to present such a challenge.
But does the law of large numbers apply here? Because people seem to, you look at Deutsche Bank's derivative books.
A really large bailout number. That's what comes to mind.
But everybody just says, oh, it doesn't matter. It's so big it'll go away, which is just such a skewed way of thinking about things. But same as Deutsche Bank's derivatives book, oh yeah, it's so big, it won't be allowed to be a problem. But the pension fund problem is, there's 1.3 trillion in underfunded, just municipal, government and local and state underfunding. $1.3 trillion. And people say, oh yeah, over time. But these guys have been promising 8% returns and compounding at 3 for a decade. And anyone knows their compounding tables knows you don't make that up, right? You don't get that back unless you get some miracle.
The average state pension in the last fiscal year returned something south of 1%.
Yeah.
You cannot fill that gap with a bulldozer. Impossible. And as to your point, as a factor of time,
but it's been a decade. It's been 15 years. It's been 15 years of underperformance. So you kind of have to think to yourself, well, when does any of this stuff now matter? Because no one, again, we get back to that, don't ask, don't tell. As long as we all keep investing this way, because CalPERS came out and started talking about lowering their expected returns to, I think from 7.5 to 7.25 or down to 7. I forget the exact.
Oh, in 2012, their actuary quit in protest.
Yeah, right.
Because he said, okay, realistically, we need a lot more. We're going to start with a half a point, 50 basis points. And basically, the legislature said, we'll be right back.
Yeah.
And they went, they did the math, and they went, we can't afford that. We can't afford to write those checks. We can only afford 25 basis points. And this is where the smile comes off my face. We are an angry country. We're an angry world. The wealth effect is dead. The inequality divide is unlike anything we've seen since the years that preceded the Great Depression. When you start to be forced by your actuary, right? State of Illinois went down to 7%.
Yep.
The guy running the pension is threatening 6.5%. Where's the money going to come from? And the answer is, for now, they cut services. I've just written about the winter of discontent and the rubbish piled up in central London's streets in 1979 as Thatcher was coming in. I worry about the ambulance not getting there in time. I worry about firefighters being cut to the bone and policemen. Last year, Denver cut its tulip budget, and it made the kind of cute story in the Wall Street Journal.
Yeah.
Isn't that something? Denver had to cut its tulip budget. How sweet. To top off its pension. But what happens when we're not talking about flowers here? And you're talking about a very populous state in Illinois, and if the actuaries are going to force the checks to be written and reduce rate of return assumptions to anything remotely related to reality, then we won't be laughing anymore looking in the rearview mirror at the riots in the streets of Athens a few years back.
But these are very, see, it's funny, when you have these conversations with people, and it's interesting, you can sit down, and that's one of the big reasons we started, is to have these conversations in an open way, because you can't have them without being called an alarmist or a lunatic. But these are very real problems we're talking about now.
Again, it's not a figment of my imagination. The guy who runs the state of Illinois plan reduced the rate of return assumption to 7%. It was a big move. And yet you've got teachers on strike. And what makes the situation all the more difficult is that by law, the pensioners are on the they're on the right side of the law. The judiciary was correct in ruling on their behalf because the language has been written so tightly that states and municipalities can't break free of these obligations legally. And so the setup to pension reform in this country is it's monumental.
Yeah.
Because legally it's not feasible.
But we know where this goes, right? They go down this road.
I mean, we're not all Puerto Rico. We're actual states we're talking about.
Exactly right. But it goes down this road, and it comes to the point where we go, well, no, you have to give them the money. And then they say, okay, but we don't have it.
Right.
And where does it go? Well, okay, Mr. Trump, you wanted the job, get your checkbook out, because that's the only way this gets resolved. I mean, it doesn't get resolved any other way at this point.
So here we are in Dallas. I give speeches all over the country. Typically when I'm here, you got a lot of backslapping. because all these companies from California have abandoned the state, and here they've all landed in Dallas, gateway to NAFTA. We can do business here, no state income tax. God, we're number one. You want to quiet down an auditorium full of people? You tell them that Mr. President's going to have to write a big check to bail out big states and that their taxes are going to go up. Their federal taxes are going to go up. Because, by the way, the United States, if these things start to happen, well, then our treasuries aren't quite as safe when it comes to flight to safety.
And so all this, as every conversation I seem to be having recently, brings us all the way back to the dollar. Once again, it all kind of comes back, one way or another, it comes back to the dollar. And we're in this period where we've had a really strong dollar, it's kind of gone sideways. It looks like it's threatening to go higher. But I struggle to see how long term. I get the argument for short term, maybe it goes up another 10% from here. I get that. And I understand the big structural short in the dollar could be another, some more gasoline on the fire that could potentially try and drive it higher. In the end, like all fiat currencies, it's had it so there's no fiat currency in history that's ever survived. Ultimately, they all go back to their intrinsic worth, Voltaire said, which is zero. But the problems that the world will face if we get a strong, like a really strong dollar, if the DXY goes to 120 or tries to go beyond that, again, like the pension, they're so overwhelming. How can it be allowed to happen? How can free markets be allowed to carry on? Because the problems they are now
going to break
cause,
the rest of the world's back.
Yeah, absolutely. And that's not at 120. That starts to happen at 110.
We spoke a little while ago about Chinese reserves, and they can do whatever they want, which is an interesting way to run a country. But if push comes to shove, and they're made to choose, and they think they're throwing more good money after bad, and the stakes are that high, then take it all the way to the end, and you tell me what they're going to spend that money on.
Sure. No, I don't disagree. I don't think it's even a question.
But I'm talking about conflict.
Yeah, no, absolutely.
I'm talking about their military.
Sure.
And remember, Germany's starting to build up its military for the first time in my lifetime.
Well, it's interesting. This is a great thing to come on to, because I've had this conversation quite a bit recently, and I gave a presentation January 2015, which talked about the parallels between now and the build-up to World War I. And I wasn't saying there's going to be a world war, right, but in times of economic stress, right the way through history, you can go back as far as you want, the outcome normally is a conflict of some sort, whether it's regional, whether it's global, right, and the propensity for this to get out of hand quickly and accidentally, or maybe in a regional way intentionally, because it's a great distraction, is so elevated now that I've seen some very sensible, middle-of-the-road people start to talk about this now.
When you think about something that is so superficially limited to talking about different segments of the bond market, let's talk about energy in America. Ha 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 ha. You know what? It's a really important subject. The fact that OPEC is irrelevant could be at the crux of what could have the Chinese stop and think about their precious reserves. Because of the fact that every time you approach 50, some schmo in Texas is turning on a pump and going, I can make it work at 50, I can make my break-evens go. Great, let's do it. Boom, you cap oil prices. Now I know that all the sell-side analysts say it's going to 80, blah, 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 blah. But you have a permanent ceiling on oil prices. And how that ripples through to the largest contiguous border with China and throw in all of the Middle East, and the fact that there are no men in Russia and no women in China, and you start to really logically be able to play out a scenario in your mind where something as innocuous, it's a tax cut for the U.S. consumer. They're spending less at the gas pump. When you're running entire countries based on your oil revenues, keeping
unstable countries too, inherently unstable countries.
You start to be able to connect the dots and see how something as innocuous as WTI can change the course of history.
Well, WTI turns into WTF in a heartbeat, right, when this happens. Things get out of hand quick. Well, look, we
That was really good.
oh, what can I say? I'm here all week.
Gosh, I'd have to go write that.
We
Sorry, stole it.
That's all right, that's fine.
Wait, on camera. Whoops.
We can edit that bit out. You can have it. You're welcome
Yeah.
to. But I mean, look, we got the smile off your face. Thankfully, we've put it back on your face. I mean, is there any bright light? Particularly, as you said, here in Texas, there's at least some hope and there's some enthusiasm about it. May be local, but is there anywhere you see that there's something happening over here that may offer some hope, may offer some a little light to bring into the darkness?
So, if I look out the window, there's a crane. I'll put a smile back on my face in a minute, but the smile's not on my face because of where we are here. When you consider that New York is the number one market, hotel rooms, apartment supply, followed closely by Houston and then Dallas, to fall back on a cliche, we've got a problem. And we're prone to these boom-bust commercial real estate cycles. And I know history always rhymes, doesn't repeat itself, blah, 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 blah. But we've got a supply issue here in this great state. But what puts a smile on my face whenever I doubt where the country's headed, and I wrote this 2 weeks ago, I Google single African-American mothers, de Blasio, Brooklyn Bridge. When you Google those three terms together, you get a picture of single African-American mothers marching across the Brooklyn Bridge, protesting anybody trying to rip out from underneath their children's feet an escape hatch for the first time in generations, multiple period end. It's not elegant. It's not overnight. And there might be bloodshed in between. But if a change of administration can bring about the ability to reform our education system on the back of a pension crisis that forces the issue, by the way, because you're talking about the teachers' unions here. Mm-hmm. I hate to step on any political hand grenades, but if you can reform our education system, I mean, I'm going to borrow that man's words. You can make America great again.
Yeah.
I'm fortunate enough to live in a school district here that graduates 97% of its students college ready. Step outside that school district, the number drops to 3.
Really?
Something in this country has to give, and it has to start with educating our young, and it has to be insisted upon by the parents. And if you want encouragement, it's the fact that they say, if you're going to attempt to deny me the American dream, damn it, I'm not gonna let you.
Well, I can't let this go because I have this. Something's been happening since the election on Tuesday. I've been, my Twitter feed as well is lit up, and I'm seeing posts from people talking about how university campuses are having to. One of them was giving kids Play-Doh to play with to calm their nerves. One of them was bringing puppies in for university, college, people getting a college education to play with, to soothe their nerves, because they were so distraught about what happened on Tuesday. And I kind of look at that and I think, where is the hope? If this is, life is fundamentally unfair. Either we all die of cancer or nobody dies of cancer. It's not a field you can ever level. There is going to be breaks, tough breaks, and I get the intention to even it for everybody. I think it's a noble idea. But you have to understand that you can't.
I don't get that. But good for you.
No, it's a well-intentioned thing. But there is
but
a point.
It's what's made the underbelly of the country soft.
No, I agree. But there is a point where you have to go, okay, we've done what we can. I'm sorry. That's the best we can do for you. Yeah. Instead of this constant, okay, there must be something else we can do. And it leads to more regulation, it leads to bureaucracy, it leads to all these things that you're trying to legislate that you can never actually achieve. And so I look at this, and I don't want to, it's not a generational thing, it's certain pockets of a generation. I've got kids at university age. And my kids, whenever they've come to me, and they'll be the first ones to deal and complain and probably shock me to the authorities. But When they come to me and say, Daddy, it's not fair, I say, correct, it's not. Go away.
Nor will it
Go
ever
tell
be.
somebody else. Right, so when you look at that education, it's such a difficult thing to do because getting a college education now doesn't necessarily mean what it used to mean.
No.
So, I hate to be the darkness to your light. They're asking you to give me something that's light, but I wonder what the future holds for a generation of people that when they see an election result they don't like, are given puppies and Play-Doh. I mean, what happens when the real world, and it comes back to everything we've spoken about, whether it's interest rates go up, cost of living goes up, you don't get the roads repaved, you can't have what you want.
The iPhone 8.
Yeah, what happens?
I mean, is therapy the next cottage industry? If I was worried about the millennials, I'm petrified about the generation behind them. I mean, they have no concept of reality. Look, I started out they called it SAC, San Antonio Community College. Working 80 hours a week, sharing a car with my mother that had no brakes, by the way. Try learning how to park. You learn how to park on inclines when you have a car with no brakes. Years later on Wall Street, I made it. I've got 3 degrees now. I can wallpaper my walls with them. It wasn't the education. It was fighting to have the education. And when the time came, it was having the biggest party of my life because I paid off my student loans.
Yeah.
And it was the pride of having done so. And never looking back and saying, from this moment on, I'm in the black. It made me who I am. And I worry about a generation that doesn't have to fight for it. Yeah. I think they'll be given an opportunity shortly. I really do. But it is the younger generations coming up behind them. I mean, if we can pull our head out of, I'll not finish that sentence, but if we can start to emphasize science, technology, math, innovation, educating our own engineers, it can be a great thing. But there's a lot of come to Jesus in between.
Yeah.
A lot.
Well, look, I hate to end on a dark thing, but look, it's always such a joy talking to you. I am going to go right now and get you some Play-Doh and puppies because I think you've earned them. But Danielle, thank you so much. Let's do this again soon.
Absolutely. Look forward to it. Thanks.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.